Morgan Stanley and Goldman Sachs beating expectations. And Taiwan Semiconductor also topped fourth quarter targets and increased its forecast. Let's get more from Laura Lau, Chief Investment Officer at Brompton Group. Laura, great to see you. Thanks for joining us. Anything of interest there with the Morgan Stanley and Goldman Sachs numbers? Anything jump out for you?
I would say that trading revenues has been very, very good. Goldman Sachs beat their previous equity trading numbers. The pipeline for investment banking is very strong. Morgan Stanley, their asset management arm, is getting close to that magical $10 trillion of assets under management. So on the whole, just very, very good. And looking forward, the pipelines are very, very strong. We're expecting we could get some big IPOs this year. We could get, OpenAI, which was, the makers of ChatGPT, Anthropic, the makers of Claude chatbot, and then SpaceX. So we expect the earnings for the investment banks to continue to do very well.
It's interesting, isn't it? Yeah, I mean, this is going to be, if these huge IPOs come off, they could be record breakers, certainly in the industry that they operate in.
And they're helping to fund AI. So certainly Morgan Stanley helped fund Meta's big debt offering. So that, goes kind of into TSMC, Taiwan Semiconductor. That's how they get the money to build more plants and increase their capital program and increase their revenue.
What about Taiwan Semi? Maybe we can have a look at that stock. Like other chip makers, it seems it just can't meet demand.
So demand has been just so strong, and it takes a long time, a lot of expertise to build these big plants. So they're estimating this year alone, $56 billion. That's a lot of money. And they expect the next 3 years to be even higher in terms of capital. And they also expect the revenue to grow 30% this year. That was much higher than people expected. Analysts expected only 25%.
You have some stock ideas for us. An interesting one, Cardinal Health, huge player in the U.S. medical system. What attracts you there, Laura?
So what we've seen is the past couple of years, healthcare has actually underperformed. However, we do think that since it's underperformed, that some of the funds flow will be going back to healthcare, especially since we're seeing some of those policy headwinds dissipate. So we had basically a lot of the drug companies had issues with Trump. Trump wanted lower prices, and they've negotiated a lot of those. We think some of those headwinds are done. And what we do like about Cardinal is that they're play on drugs. And we do see that with the aging demographic that more and more Americans will be using more drugs. So they are a play on that. The other thing they're a big play on is as they age, a lot of those specialty drugs where you need infusions, like for cancer treatments, that's growing. And what they also benefit from is a lot of drugs are going off patent. Mm-hmm. And when these drugs are on patent, their profit margins are 1%. When they go off patent, the profit margins jump to 15%. And the next 5 years, we see a big jump in those drugs that are going off patent opposed to the previous 5 years. And the valuation is less than the S&P 500, yet they're growing 10% per year.
Laura, last night I started some bridge lessons, beginner bridge lessons, tried to keep my brain cells functioning, but society is getting older, there's no doubt, the demographic profile. Chartwell Retirement Residences, you see opportunities there?
So the opportunity we see is, again, the aging demographic. So those, especially 80 plus, that tend to go into these senior housing homes, that is growing. That population is growing by 4% over the next 20 years. However, in terms of the housing, it's growing less than 1% in Canada. So we need at least 20,000 units per year to keep up with the demand. Last 3 years, we built maybe 9,000 a year, and we're seeing the starts are 7,000. So we see a big gap in supply and demand, and as a result, they are getting pricing power. So this is, we think, a good long-term theme.
And then finally, discount retailing, TJX. Their off-price brands or chains include Winners in Canada.
Yeah, so Winners, TJ Maxx, they have that treasure hunt where you never know what you're going to get. And they're definitely in that, they appeal to those discounters, lower price and value. We're seeing that whether Americans or Canadians, we're really treasuring value. And that's what TJX offers. So it's been a long-term compounder, much like Costco. And we think that they will continue to do well.
Yeah, it is interesting. And it's the thrill of the hunt, too. It's partly recreational. You never know what you're going to find. Yeah. Laura, thank you very much indeed. Laura Lau, Chief Investment Officer at Brompton Group.